Everyone, for market minutes today, we're going to look at ZETA. ZETA stock. Do I have the right thing pulled up here? Yes, I do. So today and yesterday were terrible days in the market. Terrible. ZETA's down almost 10% today. I don't even think there was any specific news that caused that drop. I just think today was a terrible day in the market. I can make sure if I just look here I use Moo and they're pretty good at giving you news, breaking news on any stock. And yep, I'm not seeing anything. So just terrible day in the market. This is really more about this. I mean, that's a pretty terrible week, and that's an even worse month. So just has not been a good month, and I think that's what this is about. So, but with ZETA, we'll do the standard. We'll look at the latest earnings. We'll look at their valuation, and then other things to consider. So I'm just going to go straight to their numbers here. So they're giving me the balance sheet first, but I like the income statement first. I usually only look at the income. I only look at the balance sheet if I'm concerned about cash burn. Not always, but most of the time. So, okay, they got a solid revenue growth year over year. That's about 20%, 25% revenue growth. And then their total operating expenses grew by about that same amount, about 70,000. So that's not great. Yeah, because this is about 70,000 growth. 94 minus 314 and 80,000. Okay, so margins maybe improved slightly, but what you're seeing is that their operating expenses are increasing about as much as the revenue growth did, which isn't great. Is there a one-off here, maybe? They're spent about an extra 10K in sales and advertising, extra 5K in research and development. This is maybe something, this acquisition related expenses. Maybe this isn't something that's going to happen all the time, but that's not great. So, now we'll look at, then they have some interest expense and then their other expenses, which, is weird because what's going on here? Why is this? Oh, last year they must have had some sort of credit, I guess. Okay, the way that they have this is kind of confusing me. So I'm just going to do 394 minus the 376, 18 minus 17. Minus 16. And then an income tax. Okay, so this is looking like to me whatever this is, this other expenses, I'm gonna pretend it doesn't exist. So if I pretend it doesn't exist, because it's below the kind of a other item. If I pretend that does not exist, minus 376, minus another 17, you're looking at a company that is not making money. Not making money. They're getting closer, but yeah, this was income last year, and they have this random other expense right here that kind of hit them. So either way, how you chalk it up here, they're barely making money here. And I don't know that that's going to change, especially if they grow their revenue, but then their operating expenses grow along with that. So that's not encouraging. And because that's not encouraging, I'm going to look at their balance sheet. You can see they got a lot of cash. Let's look at their debt, long-term borrowings. Ooh, they have a lot of debt. That's a lot of debt. Takes most of their cash. Okay. I'm not super loving that, to be honest. Let's look at Zeta. Let's look at their. So now we're going to look at their valuation. So for what I'm getting from their financials is that you have a company that's barely breaking even that has a lot of debt. But that is growing sales, but the operating expenses are growing right along with it. So they have a market cap of 3.5 billion. And then, they don't have they're not really making money, so they don't have a PE ratio. So why? What am I missing here? Because this isn't looking great for me. And maybe you guys know, you can form, but I'm not seeing, what am I missing? Why are analysts, what's this? Why are analysts bullish on a rich valuation doesn't make money or barely breaks even and has a lot of debt? Yeah, there must be some sort of deal or something that I'm missing. And carries meaningful leverage, but okay. Beat and raise quarters, 25% year-over-year revenue growth, organic growth, I guess. This must be what I'm missing here. Statement of cash flows. Right here. Ooh, look at that. That's a lot of stock compensation. Cash flow from operating. Accounts receivable. I don't know that I'm seeing that, but okay. Generated free cash flow with for 100 million. 29 to 30 versus the trading. Carries moderate leverage. So there's something about this free cash flow that they think is just doing amazing. And they did a repurchase of shares here. I don't know why they're doing that when they have debt. Beginning and end, that's showing a cash burn. I guess what they're saying is this accounts receivable is where they're giving their money, but this is a lot. That's a lot of stock-based compensation, which is a lot of dilution. So I guess the bullish perspective is the cash flow is improving. They're getting close to profitable. And it looked like there was something about AI leverage. So it's an AI play. I don't know if that's kind of the bullish perspective. The bearish perspective would be the debt. The valuation's pretty high. And for me, the revenue is growing, sure, but the operating expenses basically grew right alongside it. So, yeah, there you go. There's your kind of angle on that. I mean, if it were me, I would not be interested in this. But maybe I'm missing something. I commonly do. So let me know if they're, what the bullish perspective. If you're in this, I hope that it goes up. I hope that it moons. I hope that you make money. But for me, I'm not that interested. So